Stanbic Investment Management Services today released a report indicating that diaspora remittances have contributed more than $3 billion to the Kenyan economy over the last 5 years. Though, for a closer look at these numbers, we're joined in our studios in Nairobi by Anthony Mwithiga, Chief Investment Officer at Stanbic Investments. Anthony, thanks so much for your time. We know that alongside agriculture and tourism, remittances are a major generator of foreign exchange in Kenya. What about all the volatility we've seen in international markets? Why hasn't that impacted significantly this particular area of investment flows?
Thank you. The remittances to Kenya from Kenyans working and living abroad have actually remained consistent and resilient over the last 8 years, and more importantly, over the last 2 years, where global markets and specifically Europe and the US economies have had a slowdown. The main reason for the resilientness of these inflows is because first and foremost, there are smaller amounts from a transaction perspective supporting largely currently non-investment sectors in the local economy. You realize 52% of these remittances have been targeted to local households in the country, mainly for healthcare, education, and other non-long-term investment activities.
Okay, Anthony, that's a big concern for many people, whereas, you know, obviously the money coming in from abroad is helpful, but it being directed to consumption as opposed to investments does create a big gap in terms of local investor participation in the economy. What's being done to make remittances a little bit more productive as capital in the economy?
Thank you. Yeah, there's a worry by the fact that only less than 50% of the remittances are going to capital and investment expenditures. I mean, a paltry 4% is going to savings, 8% going to the local real estate market, and around a third of the remittances going to support small businesses. What is being done, to our knowledge up to now, by the government is try and attract the money to support the local government borrowing program through issuance of treasury bonds targeted mainly to these remittances. Okay.
In other countries, we're starting to see private equity companies creating boutique investment funds to be directed towards some sort of a diaspora bond. How much momentum is being generated, not just by the government, but by the investment community, by those sending the money themselves?
There's actually very low activity on the private equity side trying to attract and motivate diaspora remittances on their side, and this has mainly been being caused by the fact that diaspora remittances remain largely inflows which have not been targeted to investment activities. But the main reason is because we lack, or there's a lack of targeted investment products to actually harness these inflows, and that's the challenge. I mean, the local capital markets authority has to come in and sort out.
There's also the question of forex volatility, and this year alone, the Kenyan shilling has been one of the worst performing currencies, losing over 25% of its value to the dollar. How has that impacted the diaspora remittances?
Yes, actually, the shilling has really lost values largely in 2011, although strengthened briefly over the last 2 to 3 weeks. The effect on the remittances is actually been not felt. The remittances inflows month on month in 2011 have been growing consistently, and even though the remittances being on their record highs by end of September this year, did not do much to stop the weakening of the shilling. So there's been no relationship with a weakening currency and strong diaspora remittances still coming to the country, regardless of the volatility in the shilling.
The geographical profile of those sending money back home, How many, not an exact figure, but what's the profile of those bringing money in from the United States versus those from Europe? Because certainly there are fears of a double-dip recession in Europe that's looming, austerity measures kicking in. Certainly the money coming through from Europe might dwindle in the year ahead.
Yes, that remains a concern because the source markets or economies of remittances to Kenya remain largely North America, European, and US. Given what's happening in those markets, there's always a fear that the remittances might slow down. But what we think will make these remittances remain resilient is the fact that the average transaction of a single remittance is $105. And these amounts are very small compared to the earning capacity of professionals working and living abroad and supporting as family members in Kenya. What we think might get affected is non-consumption related inflows, like the ones targeting savings and towards the property market, and maybe support of small businesses. But the larger portion of remittances targeting the consumption in the country through supporting households will remain, since the amounts are really small per transaction.
All right, thanks so much for your time there, Anthony Mwithiga, who is with Stanbic Investments as the Chief Operating Officer there.